previously on Islamic Finance Future Focus. We examined the changes being effected in Saudi Arabia by Crown Prince Mohammed bin Salman's Vision 2030 and the potential effect on Islamic finance in the region.
So in order to push the country into the modern world, they had to have a very large, meaningful, impactful change in everything. So Vision 2030 is so comprehensive, you can hardly imagine some of these goals that they're setting for themselves. But in general, they're realistic goals. And I think in some cases, in a lot of cases, they're going to achieve them.
Financial Services Program is one of the 12 executive programs which are part of 2030 vision. So you can understand what kind of an importance financial services have. We are invariably talking of, or to great extent in the sense, we're talking of Islamic or Sharia compliant financial services. It's a population about 30 million. People understand Sharia compliant investment, people understand Sharia compliant finances, people understand Islamic finances.
Financial experts suggested Islamic finance could have a greater role to play in the kingdom, and if Vision 2030 is to succeed, the Saudis will have to look further afield to help uplift the economy.
Well, what's interesting about Saudi in terms of Islamic finance, it's not really hitting its weight. So Saudi, for a country that's the home to Mecca, Medina, that has a domestic population, it's a G20 economy, should really, I think, have a bigger role within Islamic finance.
Crown Prince Mohammed, he's really pushing for all new regulations, all new laws, and all new institution formation so that they can unblock vast amounts of domestic savings and mobilize it for domestic investments. The other source of capital is, for Saudi Vision 2030 goals, is international capital, and I think everybody will agree. International capital is almost unlimited if you create the right environment for it to flow into your economy.
The very prestigious Mansion House in the City of London played host to the IFN London Islamic Finance Week 2018. Participants from all over the globe descended on the venue to discuss the growing Islamic finance industry. Some of the key issues and themes influencing global Islamic finance investment were on the agenda for examination and discussion, including Brexit, the ascendancy of Fintech, the 2030 vision of Saudi Arabia, climate change, and the potential of furthering green investments.
5, 4, 3, 2, 1.
Technology has always played a significant role in the evolution of humans. It's been a global game changer and has been a disrupting force in many sectors, including finance. Fintech is a buzzword that most will be aware of in our tech-savvy world.
We're seeing that the banking community is starting to move towards technology-based solutions, and customers are responding by using branches much less. They like to do things online, they like to do things on their mobile phones, and the Islamic banking industry is no different. The customers of Islamic banks also want to have the convenience of technology, and not just in a banking environment, but also in non-bank financial institutions.
Fintech is obviously a very new area, and I think it's an area that is particularly because Islamic finance has historically had difficulties in reaching its target market and in overcoming some of the doubts and suspicions that some Muslims have about the way that Islamic finance is run and organised and the motives behind it. I think Fintech gives people an opportunity to be more accessible to their target customers.
Fintech's going to have a big impact in banking in general, and Islamic banks are not going to be immune. You have a number of non-bank technologies putting together consumers with the providers of finance, or aggregating deposit takers and getting the best deal for customers. And it's only a matter of time before more and more Sharia fintech players arrive on the scene.
Regardless of the benefits and the welcome response from customers to the growth of fintech, there are concerns about the regulatory aspects of fintech companies and applications, especially with something so important as personal and financial data.
Potentially, fintech can democratise finance, but there are definitely risks and that people need to be aware of. And I think it only needs one or two unfortunate experiences, scandals to happen, and that's going to put a real damper on the market and its development.
Fintech applications that are financial and banking related do still have to follow the rules and regulations in this country. So they will be regulated, for example, by the FCA if you are buying, say, a home financing product. So customers will still be protected by the same laws that protect them for traditional, conventional banking.
The Open Bank project is a data sharing model, the purpose of which is to increase competition and innovation in the marketplace, allowing smaller financial institutions to compete with bigger banks. Its other role is to enable customers more choice, better products, and more control over their financial information.
Islamic banks that operate in the current account space, because that's the transactional end of banking, that's the day-to-day end of banking, are going through something called open banking, which is driven by PSD2, the Payment Services Directive number 2. Well, what does that all mean? It means banks are going to give access to their accounts with the client's consent, with the customer's consent, so that other players and non-banks can get your permission and access your bank details. Now you think, okay, well, what are we going to do with that? Think about a credit application. Today there's some automated scoring, but typically you might be asked for, can I have your bank statements? Can I ask some information on you? But no, actually with machine learning, you've just given them access to your bank. That bot, if you like, will go in, scrutinize all your transactions, come back with a decision, and within seconds, you're onboarded, right? And that's quite revolutionary compared to what we have today.
With fintech developing fast, there is a growing need to develop regulatory frameworks for emerging business models ahead of releasing them into the marketplace. Sandboxes are facilitating this in the digital Islamic economic space.
If you're a startup or early stage fintech company and you need to test your product before it's actually authorized and licensed to be sold, you need to have a facility that allows you to test that product in a legal manner, and that's what a sandbox is effectively. It's somewhere where the regulator works with you to ensure that you have a product that's viable and risk appropriate for your customers before it's actually sold to them. And that's why it's a very useful thing to have.
It has taken a while to impact, but fintech has in recent years been a disruptive element in the Middle East. As a result, GCC governments are on a mission to bring the brightest and best to the region, to push the boundaries of technological innovation and to capitalise on what that can offer. However, there are some hurdles to overcome.
One of the great challenges for these accelerators and incubators in the GCC and the sandboxes is that the target market is relatively small. So if you're licensed to distribute a financial product, a fintech product in, say, Bahrain or Dubai or Abu Dhabi, then actually at the moment you're still restricted to that one jurisdiction because you're licensed by that authority. There's no passporting as yet within the GCC. Until that happens, the target market is going to be very, very small. So I think, in my opinion, if those GCC centres tied up with a recognised financial and technology centre like London, then they're likely to be much more successful because then they have a global market to sell to.
In Middle East, other than the conventional investments, technology growth or technology as an asset class is emerging because there has been a big change in our lifestyle and technology is affecting us. If we want to get the best return of our portfolio, there is no way we can avoid technology investment, and fintech is an important part of it. Because we're talking about financial services, fintech is bringing a lot of change. It's bringing change in day-to-day of how bank works, financial institution works. It's throwing a lot of opportunity.
Blockchain, a new computer technology, is set to revolutionize the world. The potential of this decentralized digital ledger, which offers increased transactional security and transparency without the need for a central authority or third party, therefore proving more cost efficient, has attracted the attention of financial institutions globally. In the Middle East, the Organization of Islamic Cooperation, where Islamic finance is prevalent, are taking a keen interest in blockchain. In fact, such is its potential that Dubai has revealed plans to becoming the leader of blockchain use by 2020.
Blockchain is just another type of product or framework for a product which will help Islamic finance expand in the Middle East. The Middle East needs to look at many different aspects of fintech, and blockchain and cryptocurrency and artificial intelligence happen to be a number of those different areas. It's one of the many things that they are looking at now.
Blockchain has the opportunity to play a very important role in the development of Islamic finance, because Islamic finance is already struggling to adopt digital technologies. And blockchain enables us to leapfrog some of the existing technologies and be essentially future-proofing the Islamic finance transition from current systems and structures that the banks have in place to blockchain-enabled structures.
It's really important that when we use words like blockchain and cryptocurrency and AI, that we're not just jumping on a jargon bandwagon. Because what governments tend to do is say, oh, I've heard something really interesting called blockchain, we must do it. I'm not really sure what it is, but we've got to do it because everybody else is.
Fintech is not only proving to be an enabler of democratizing the financial landscape for consumers, but is gradually enabling a shift away from traditional methods of conducting finance.
The example of the Kenyan farmer with a mobile phone who doesn't have access to branch banking but can exchange money and trade goods with people using his mobile phone, because everybody has a mobile phone now, is an excellent example of social inclusion. And Islamic finance is an economic and financial system that's based on justice, transparency, social inclusion, democratization of finance. So combining this socially inclusive technology with the ideals of the Islamic economy is absolutely what Islamic finance was made for.
Using technology allows us to not have a huge back office function where we can actually pass those savings on to our investors. So it really boils down to using technology well and implementing it correctly to allow a new generation of investors into alternative finance.
In the fintech Islamic finance sector, despite the evolution to more cost-effective business solutions, there has been a challenge in convincing Muslim investors to consider non-traditional methods of doing finance. Outside of Muslim communities come challenges around using religious words in relation to business.
The word Sharia has some negative connotations, unfortunately, with the press that we have in this country. I think people that begin to understand it and educate themselves in terms of Islamic finance and Sharia finance, it's beneficial for them. I think we have been very careful at Yielders in order to frame ourselves as a halal investment opportunity. We don't try and limit ourselves to just the Islamic market, we're an investment opportunity available for all, and aligned to more ethical investment opportunities, not just Islamic in that sense.
The Islamic finance industry has been slow to uptake technology and is now trying to make grounds, having realized the revolutionary prospects of the blockchain.
Essentially, banks need to be able to develop blockchain platforms. And the blockchain is essentially a database, which allows us to remove the intermediary and the middleman from the equation. So it allows for more streamlined processes. So that means that banks can, one, improve their customer experiences, two, reduce their back office costs, and three, be able to reduce the cost of the products that they create. Because one of the challenges Islamic banks, for example, have is that they have relatively higher product costs. By using technology, we can reduce that spread and hopefully make Islamic products, Islamic mortgages, as competitive, as cost efficient as a conventional mortgage.
Security, trust and transparency are just some of the characteristics that align blockchain technology with the principles of Islamic finance, so present a vast array of opportunities to the Islamic finance ecosystem.
Blockchain is a distributed ledger. It's a way of accounting for things in a very transparent way. So it's very suited to certain types of applications, like charitable giving, for example. It's a fantastic bit of kit, and it's exactly what blockchain is just right for in the Islamic economy.
Islamic fatwas historically have been at times at odds with new innovations. The printing press is a good historical example, and currently the debate revolves around a certain aspect of Fintech, namely cryptocurrency, a decentralized digital currency that is powered by blockchain technology. Opinions are divided. Some have declared cryptocurrencies impermissible, others remain cautious, while some don't see any compliance issues at all.
So around cryptocurrencies, I think there is a lot of education to be done because it's a very complex issue. And the problem is people tend to try and simplify that issue. Is Bitcoin halal or is it haram?
If you're buying Bitcoin as a form of investment, most scholars actually do not have an issue with Bitcoin because it's actually it represents some value. But some of the smaller cryptocurrencies are problematic because there's no exchange value, there's no way for you to actually use them in real-world applications, and therefore they become speculative.
In the Islamic space, some scholars, some very prominent scholars, have decreed it to be non-permissible. And they've said that you can't trade it, you can't exchange it, you can't buy and sell, say, Bitcoin. But unfortunately, a number of these senior scholars don't have the technical know-how. They don't understand how the global financial system works, they don't understand the monetary system, they don't understand what financial products are available, and so they're making these decisions, these fatwas, in the absence of any detailed technical knowledge and without consulting the relevant experts. I think if they did that, and some scholars are doing that, they would see that certain cryptocurrencies have got elements of a very halal type of monetary system. So for example, if you look at Bitcoin, it has many characteristics of gold, which as we know is a legitimate form of currency in the Islamic economic system. And that's very, very important. If they looked at the fundamental characteristics of Bitcoin, they'll see there's many similarities and in fact some improvements on gold as a unit of currency.
And the scholars will be focusing on the application. Their job is not to authenticate and make the technology Sharia compliant. Their job should be to make the application of that technology Sharia compliant.
I think we need more scholars who specialize in new forms of finance, new type of technologies, people who go deep into the subject, study it properly, and also take into account the modern conditions of living.
Reconciling centuries-old religious principles with a modern economic system will perhaps always remain at odds within this sector. However, with innovations such as artificial intelligence and machine learning, amongst other factors infiltrating Islamic finance, this system continues to grow. But some consensus will be needed to put this sector truly on the world financial map. Next time on Islamic Finance Future Focus, we take a look at the relationship between Islamic finance and gold and with climate change. Gold has always been an integral part of finance across all Muslim and non-Muslim jurisdictions for time immemorial. This precious metal has had great significance for humans.
Gold has never gone out of prominence. Gold is one of the oldest asset classes in the world. It's been with us for the longest time.
In 2016, the Accounting and Auditing Organization for Islamic Financial Institutions approved what has become to be known as the Sharia gold standard.
Now, there's no issue when you're buying physical coins and bars for cash. But when you think about modern day gold products, so things like gold exchange traded funds, gold saving plans, even gold on mobile phones, up until recently, there have been no consensus among Sharia scholars as to how those modern day gold products should be traded and structured.
Muslims can now, around the world, invest through gold as an alternative form of savings, particularly for the vast majority of Muslims that remain underserved and unbanked around the world. And for them now, they have an alternative to just putting money in the bank account where typically they earn very little interest or return.
Many analysts see a clear affinity between Sharia-compliant financing and addressing climate change. However, this has translated in very few programs on the ground.
Islamic finance has been lagging when it comes to social responsibility, environmental considerations, because unfortunately in previous methods and modes of Islamic finance, that whole aspect of the decision-making process wasn't included.
One thing we have to do is we have to transform our economies. We now have a moral and ethical reason to rethink the way we run our economies. In the short term, we can do things like creating green products and green sukuk.
I absolutely think that there is a lot of convergence between Islamic and ethical or green finance, and that these two fields could learn from each other. I think that the way that green finance has worked both with capacity building and bringing together the different market actors, Islamic finance could learn in the same way.